Hello again, it's Clinton and Kevin back with another episode of Financial 15. We're following up on our theme of ESG, environmentally, societal, and governance investing factors. What is greenwashing? That can be an important issue if you're going to be investing according to ESG factors. You need to know what this is and need to know how to avoid it. You want to stick around.
As we mentioned last time, ESG is a big, important part of our what we're looking at over the last little while. It is something that's big in society right now, and it's something that we need to deal with. Again, if you want to find that video, please go to our website at beckerorr.com. You can be able to find that as well as others, or visit our YouTube channel, or like us on Facebook. You'll be able to find all of that. But today we are talking specifically about the term greenwashing. We are famous for acronyms. We want to make sure that you understand what all these definitions mean, because you're going to hear it, and if you have no idea, all of a sudden it doesn't mean anything to you. Clint, greenwashing, what are we dealing with?
Yeah, financial world, lots of acronyms, lots of weird definitions. We'll get into greenwashing here. A quick reminder, the ESG explosion. We talked about this in the last video. Lots of money going into ESG. You can see a quick example. That's from Larry Fink, the CEO of BlackRock, in his 2021 letter. And they had $288 billion globally. That's just in 1 year, not even a full year. That's just January through November. That is a significant chunk of change in an about 11-month window. And then you can see the quote there, the second one. That's from Tariq Fancy. He was the former chief investment officer of sustainable investing at BlackRock. So former, he no longer does that. But he was not so keen on this whole ESG explosion. In truth, sustainable investing boils down to a little more than marketing hype, PR spin, and disingenuine promises for the investment community. So not exactly a positive point there. And that really touches on exactly what greenwashing is all about. I'll throw you the definition here, Kevin. You can see it on the bottom of the screen.
Yeah, it's a form of marketing spin, basically, that's put out there. So we want to make sure that, hey, we're doing what we can. Does that mean that all companies that are dealing with ESG are actually ESG companies? Well, again, that's going to depend on what your definition of ESG really means. And some of these companies, yeah, okay, they know something's going on, so we're going to make sure that we do what we can to promote. What are we helping with our environment? What are we looking at to maintain that we are helping society, or that our governance is being looked after and we are an environmentally friendly company? So yeah, it's more of a PR spin possibly, but it's something we should look at.
Yeah, and the definition there says a PR spin, particularly for green marketing. That's not just for environmental. It would apply to any of the ESG factors. It could be the governance or the societal factor as well. And I'll give you a quick example here. There's really two big ways, in our view, that companies could be using this greenwashing. And one of them is with the rankings. We'll pull this up. Quickly, the ranking system here is by Refinitiv, and they will rank companies on the E, the S, and the G, all the factors. They'll come up with a total score, but companies know they're being ranked. So they will do a bit of window dressing, make sure they score a little higher on the environmental side, a little higher on the governance side to make sure the total score is higher, because they know investment managers might be using these rankings to make investment decisions. Now, I'll make this full screen here so we can see it here, Kevin, but I'll go through the details. If I said we have environmentally, societal, governance factors, ESG, and you look in the top 10 there, you have Philip Morris and Altria, two tobacco companies in the top 10. Now, this was done as of March of 2021, so the rankings could change, but the idea here is you have a couple of surprises when you look at the rankings.
Yeah, you really do. And I mean, that's the biggest factor that a lot of people need to see, is that, you know, not necessarily is a company scored the way that you would sort of read it. If we take a look even further down, I mean, Ford is a motor company. You are using a lot of different parts from materials, oil and gas and things to put all this together. Now, is that environmentally friendly? Well, there may be environmentally friendly factors they've gone on. They've done better with their mufflers or things along those lines. Halliburton, an oil service company. And how, if you're digging holes in the ground, is that environmentally friendly if you're Newmont Mining? So again, they are doing something, whether it's in their governance, whether it's in helping society from where they're dealing with, but they are scoring well on what is known as the ESG chart, because they're hitting a few of these big points. And that's something to look at. So not all companies are created equal, we know, but is each one an ESG company? It's hard to say. That's one of the factors we got to take a look at. And as you can see, you've highlighted some of these specifically.
Yeah, a couple of surprises here. This was put together by All Star Charts, by the way. And a quick item here on the Refinitiv ranking system. They try to rank companies in a way that's going to be more comparable. So they don't actually look at what the company sells or the company's line of business. That has little impact on the score. So there is a possibility that oil companies will score higher or tobacco companies will score higher, because what the company actually does doesn't have that much of an impact on the ranking system. And you can clearly see that in the results when you have tobacco companies, 2 of them in the top 10, according to this ranking. So we talked about ESG factors. We talked about ways that could get some greenwashing. This is one of them. Companies know they're being ranked. They know the ranking system, so they'll do a little window dressing to make sure they score higher. A second way you could see it would really just be with the subjective nature of the definitions, like what is environmentally friendly, what is societal governance, the subjective nature of that, and you'd get some investment products that have some investments in there that might not be what people think. We have an example on the screen here, Kevin. This is the RBC Vision Canadian Equity Fund. I just pulled up the rankings and the details as of August 14th. Why don't you walk us through this?
Yeah, I mean, basically, if you look at the top 10 investments, a lot of it seems to be fairly good. But if you go to number 6, Enbridge, now we're dealing with a pipeline, running oil. And theoretically, if we're looking at a sustainable energy sort of scenario, green energy, oil is definitely not listed as that. So running oil through Enbridge is not something we'd consider. Or Canadian National Railway, it's another one. It is using products that are hauled out of the earth. Would we consider this to be more of a green scenario in the environment? Who knows? But again, societal norms may be something along those lines. And if we take a look just below that, between the energy and the materials, which would definitely not be considered part of the ESG based on product, that's 25% of the entire portfolio. One thing to look at. We're seeing similar things now, like we saw back in 2000, where value funds invested in items like Nortel or a lot of tech companies at the time that really weren't defined as value, but we needed to put them in there because of some of the scenarios that are going on. But this isn't the only example, is it?
Yeah, and we're not trying to pick on any one company here, simply saying that this is a common issue when it comes to the ESG products. Here's another example. This is an ETF, the iShares Janssy Social Index. And again, you look at the top 10, you have CNQ, the natural resource company, and Suncor, number 7 and number 8. And then if you look at the breakdown there of the overall investment mix, industrials, energy, materials, all have rather significant weightings. And it'd be hard for, I think, an average person to say, well, how does Suncor meet your ESG factors? How is that oil company in the top 10 for this ESG investment? And that's part of what we're trying to get to here is there's some subjective nature to it. And one of the reasons I believe you're going to have these included is what's called a best-in-class method, meaning these products or these investment managers might be looking at a company like Suncor and saying, all right, there's lots of oil companies out there. Suncor, they're actually trying to do things to improve their impact on the environment. They do have charging stations at all the Petro-Canada gas stations that they own, or at least the major ones along the highway. So if in terms of the oil companies, they're the best of the breed, and we want to reward their efforts, so we're going to include them. Now, that might not be the method most people would think of, but the idea is there's some subjective nature and there's some different approaches. So you have to know what you're getting into here, Kevin.
Yeah, you really do. And I mean, again, it's one of those scenarios of depending on, is it a global sort of scenario you're looking at for the ESG, or in these specifics, we've been looking at Canada. Now, we know that Canada is basically somewhere between, around that 30 to 50% mark is in materials and energy. If we're not, we're buying a whole bunch of financials and very limited companies otherwise. So you're right, the best in class, they are making some effort to go there. Another one that we might look at, which isn't in this top 10, I mean, Enbridge has been buying a lot of sustainable energy recently to try and say that, well, we're doing some pipeline, but we're doing something to try and prove we're there. So if they're getting some sort of a push, more people want to get into it, these companies are going to invest. Are there other points we should look at in regards to greenwashing?
Yeah, so the idea of greenwashing, the two big factors there is one is the rankings. Companies know they're being ranked, so they can do some window dressing to make sure they're a little higher up in the rankings. And the second factor is there's some subjectivity there in terms of what is the definition. We gave you a couple examples of investments inside of products that might be surprising. And a few tips. I think the starting point for folks, you have to know what matters to you. There's a broad definition there when it comes to environmental, societal, and governance factors. And I think a takeaway here would be figure out what's important to you. It's probably not going to be the whole list. Maybe it's going to be 2 or 3 of those items, but what is the top couple? What ones are important to you? And then I think, Kevin, often what we forget here is these are still investments. There's still some risk involved.
Yeah, we got to maintain what the risk level is that we're dealing with. I mean, you are dealing with, you don't want to go into something that is, completely speculative because it says it's green. There's a lot of new green energy companies, whether they're in solar or whether they're in wind, and they may be very small, but just because they're there, we don't know whether they're going to survive or not. They're going to be a lot riskier than some of the other ones you have out there. So you have to maintain your risk level based on that. You can't all of a sudden say that, I'm somebody that's a little more conservative, but I want to buy a whole bunch of green that may be high risk for you. So one thing to take a look at is maintaining your risk level. What are some of the other factors that we really need to consider before we dive into the ESG investing?
Yeah, and as we're learning here, there's a lot of products in this section because there's so much money going there. So it's been flooded with products trying to be competitive in that arena. So you have to do your homework. You have to know what you're getting into. And I think the best way to do that is to go slow. You don't have to take your portfolio and then just completely turn it on its head in a matter of days. You can do incremental pieces, right? Find out what's important, make sure it meets your risk levels, and then perhaps do 1 or 2 additions that would meet those criteria. And then over time, you can slowly build on that. So that way you'll have a good idea of what you own, why you own it, and make sure it's actually meeting the factors that are important to you. So it's about doing your homework and going slow.
Yeah, definitely. That's the only way to do it, because as we've seen with your rankings and everything else that we put through, not all ESG is created equal and not all of it is listed the same way. So if you have questions on this or on ESG or any of the other ones we've done recently, please visit us, chatwithclintonandkevin.com. We are more than happy to answer questions on any of this sort of a topic if it's something that's important to you, or if you have questions on other things, RSPs, estate planning. We are there for all of that one, anything we can do to help. Otherwise, this is sort of what the greenwashing definition is in a nutshell. Clint, lead us out.
That sounds like a good plan. So we'll be back again soon, another video. Everyone take care, stay safe.